Hello students, this is a quick review for the final exam for Business 150, Spring 2021. The first chapter on the final is Chapter 10, Motivating and Satisfying Employees and Teams. First, historical perspective. You should know scientific management and Frederick W. Taylor, the Hawthorne studies, Maslow's hierarchy of needs, Hertzberg's motivation hygiene theory, Theory X and Theory Y, William Auchi's Theory Z, reinforcement theory. Also, equity theory, expectancy theory, and goal setting theory. Along with goal setting theory, you should be familiar with management by objectives. Next, what is a team? And the stages in team development. They are forming, storming, norming, performing, and adjourning. Those are the major concepts from Chapter 10. Chapter 11 is our first chapter on marketing. Building customer relationships through effective marketing. This too is a rich chapter. Start with the definition of marketing, and then what we mean by customer relationship marketing. You need to know the different types of utility: possession utility, time utility, form utility, and place utility. You should know the historical perspective on marketing. There was a production era, followed by a sales era, and finally the marketing concept that said firms are in business to satisfy customers and make a profit. Customer relationship marketing is based on the marketing concept. You need to know the elements of the marketing mix: product, price, place, and promotion. What we mean by a target market segment and the different ways to segment consumer markets. That would be demographic, psychographic, geographic, and user benefit. You should also know the difference between consumer marketing and business-to-business marketing. Consumer products are bought for personal consumption or consumption by someone in your household, whereas business products are purchased for resale, to become part of another product, or to aid business operations. Next thing you need to know from this chapter is the consumer buying process. You know, the one where you have problem recognition, information search, select alternatives, purchase, and post-purchase behavior. Those are the major concepts from Chapter 11. Chapter 12, second chapter on marketing, picks up actually where 11 left off, meaning it starts with the difference between business and consumer products, which you already know. Consumer products are bought for personal consumption, whereas business products are purchased to become part of another product for resale or to aid business operations. Then we get into the classification of consumer products. They are convenience products, shopping products, and specialty products. let's see. The next thing you need to know are the stages in the product life cycle, like introduction, growth, maturity, and decline. You should know the difference between a product line and a product mix. What is a brand? What is a label? The different pricing methods: cost-based pricing, demand-based pricing, and competition-based pricing. Under cost-based pricing, make sure you understand the difference between fixed costs, costs that don't vary regardless of how many products are produced, variable costs, costs that do vary with the number of products produced, and total costs, which is fixed costs plus variable costs. Those are the major concepts from chapter 12. Next we have chapter 13, distributing and promoting products. First, you need to be familiar with what we mean by a marketing distribution channel. Next, you need to know what the members are called: marketing middlemen or marketing intermediaries. You need to know the difference between a merchant middleman and a functional middleman. Merchant middlemen actually take possession of the product, whereas the functional middlemen do not. So, the members of the channel: producer to broker or agent, to wholesaler, to retailer, to the ultimate customer. Now, of those that we mentioned, the only functional middlemen are brokers and agents. Next, you need to know what each member brings to the table. For example, what do wholesalers do? They actually help with distribution because they have trucks. They also have warehouses, and they sometimes help with promotion. Retailers, they're always going to have a pleasant atmosphere, easy parking, and a variety of products. You should be able to recognize the different retailers, like superstore, convenience store, the mall. There's a number of them. Again, you don't have to remember them exactly, but you should be able to recognize them. Next, we want to talk about the promotional mix. The elements of the promotion mix are advertising, personal selling, sales promotions, and public relations. For advertising, you need to know what advertising is and know some examples. Personal selling, you need to know that it's actually the most effective, but it's also the most expensive. Sales promotions are really just incentives to get you to buy now. Examples would be rebates, discounts, entering you in a sweepstakes. Public relations is an attempt to garner a favorable public image. Those are the things you need to know from chapter 13. Oh, there's one other thing. The levels of distribution: intensive distribution, selective distribution, and exclusive distribution. They actually go right along with the different types of consumer products. Convenience products are usually intensively distributed. Shopping products are selectively distributed. And specialty products use exclusive distribution. Those are the major concepts from Chapter 13. Chapter 14 is the chapter on social media and e-business. It will not be heavily represented on the final, but make sure you know what e-business is, and also make sure you know the different tools businesses can use in social media, like blogs, podcasts, etc. The next chapter is a fairly rich chapter, Management and Accounting Information. First, you need to know the difference between data and information, right? Data is facts or numbers, and information is data that's been organized to inform. You also need to know what we mean by a decision support system, an expert system, and a management information system. You need to know the definition of accounting and the difference between financial accounting and managerial accounting. Financial accounting reports information to parties outside the firm, whereas managerial accounting furnishes information to parties within the firm, like managers, so they can make better decisions. You need to be familiar with a few vocabulary words. GAAP, Generally Accepted Accounting Principles, a CPA, a Certified Public Accountant, depreciation, and the term liquidity or liquid asset. You need to be familiar with the accounting equation, assets equals liabilities plus owner's equity. You need to know what assets are, anything of value owned by the firm, and what liabilities are, anything owed by the firm. You need to know what double entry bookkeeping is. The next thing are the three financial statements. The balance sheet, which is called a snapshot of a firm's financial condition. It shows assets, liabilities, and owner's equity on a specific day. The income statement. It shows the same information but over a period of time. That period of time will be listed on the document. And the statement of cash flow, which follows cash in your organization. Those are the major things you need to get from Chapter 15. Chapter 16 is on the exam, and there are some major things you need to know. First, the difference between short-term and long-term finance. Short-term is a year or less, so long-term is more than a year. You need to know the difference between debt and equity financing. The debt financing means you're borrowing. Equity financing usually means you're selling stock. So you need to be familiar with common stock and preferred stock, and also what we mean by an IPO, initial public offering. You also need to know the difference between a secured loan and an unsecured loan. Secured means it's secured by collateral, another term you should know. You need to know what a bond is, right, which is really just a promise to pay with the maturity date. You should understand that bonds are bought for less than the face value, but by the time they get to the face value, they've matured to the face value of the bond. You should know the different types of bonds: debenture, mortgage, and convertible. Debenture bonds aren't backed by anything other than the firm's reputation. Mortgage bonds are secured by the firm's assets. And convertible bonds are bonds that can be exchanged for stock. Those are the major things you need to know. Oh, also make sure you know what a certificate of deposit is. The exam is roughly 71 questions, worth 3 points each, multiple choice, covering the major things we talked about. The things we talked about are 85% of the exam. There's probably 15% things that everybody that takes intro to business should know, like what is a business, what's profit, what is revenue, what are the different types of business ownership. That pretty much concludes the review. Good luck and have a great day.